Students, okay, let's just wait for the other students to join and then we'll start. Okay, now students, think about this. So Zohan, let me quickly answer your question before we move forward, right? So the idea is that what you are saying, yes, it will be balanced, right? And I mean, there's basically, it's hard to explain. The two sides will add up, but it's not that the two sides will be exactly the same. I mean, so the net difference, there would be a difference in the totals. So let's put it down like this. Let's say this column doesn't exist for now, right? Zohan, think about this. Everyone, please. This column doesn't exist. So this is what your current account is, right? Sorry, this is what your balance of payments balance is up till this part, right? Now, the two sides, as you can see, are clearly not balancing, right? Because 154 plus 11 gives you 165. So on the right-hand side, the total transactions are adding up to 165, and the total amount of transactions on the if you add these up, right? So the credit side is greater than by how much? $115 million. Is this making sense so far, right? Now, the difference that you get, you write on the other side, which is smaller. So then technically the two sides equal. Let's I know this is kind of tricky, but let's look at this one more time. So let's think about this. So when your textbook says that balance of payment balances always balances, now what we are saying now, can you see the full table? Now let's assume that this last part doesn't exist for now, right? Now, if you add up the sum of the credit sides, all the credit transactions, right? All the credit transactions, you just add that up, right? And then you add up all the value of transactions on the debit side. So you will see that the credit side is greater by $115 million compared to the debit side. So if I write, this balance on the debit side, then would the two sides be equal? So it's not that the two sides will always equal, but it's the balance that adds, it's the balance or the difference between the two sides, which you add on the other side, which automatically balances that. Are you getting me? So this is basically more of an accounting concept, which you might have difficulty understanding if you haven't studied accounting or how trial balance works. And again, on top of that, that's not part of your syllabus, so you don't need to worry about that. Now, why am I writing it on the other side? There's a reason, right? There's a reason that you understand it better, right? Got it? Very nice. Okay, now students, think about this. Now, the credit side is greater than the debit side by $115 million. Credit was representing what? Inflows. Debit was representing what? Outflows. This means that during this time period for this country, cash inflows were greater than cash outflows. More money came into your country compared to what went out of your country, like more exports, which means more money coming in, more foreign businesses investing in your country, more foreigners buying property in your country, and so on and so forth, right? So there was relatively more inflow compared to outflow. Now, when there is more inflow in your country, what will happen to the demand for your currency? First of all, you can define this. Now think about this. That will mean balance of payment balance is a surplus, right? So you can simply write this down as surplus because inflows are greater than outflows. Because if it would have been otherwise, like outflows would have been greater than inflows, then we would have written it as a deficit, right? Now, since inflows are greater than outflows, we write it as a surplus. And why am I writing this down as slash change in foreign currency reserves? So when you exported more, when more investments came in your country, when more foreigners bought property in your country, are you following me or not, right? So the demand for your currency increased, which means the country's foreign currency reserves during that time period increased, right? How so? Think about this. When countries are demanding more of your currency, right? So people are buying rupees, let's say, right? And they're giving dollars. So when dollars are coming to you, I mean, in a way, what happens basically that when more stock of your currency, just give me a second. So the way it works is that when they're Pakistan is exporting, right? So even if you're paying in rupees, just a second, I'm thinking out loud, you can convert those into dollars. Yeah, okay. Let me define that for you. Okay, now students, think about this. Let's try to sum this up. Now, first thing that I told you that after you have entered all the transactions in the balance of payments, then you have to add up the credit side and the debit side. Now, if the credit side's credit value, the sum of credit column is greater than the debit sum of debit column, that means surplus. That's why I've written surplus. On the other hand, if the sum of debit transactions would have been greater than the sum of credit transactions, that is defined as deficit. Easy? Okay. Now, if it's a surplus, which means credit transactions are greater than debit transactions, that means that the countries during that time period, the country's foreign exchange reserves increased. So you must have, heard in the news that Pakistan's, foreign currency reserves are depleting. We were initially on $30 billion and now we are on $20 billion, blah, 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 blah. Now, how that change happens? Now, think about this. When you are using your foreign currency reserves, I did tell you that all countries' central banks hold foreign currency reserves, like all the major currencies, at least, like dollars, pounds, euros. These are some major currencies in the world, right? And so on, right? Similarly, I mean, it's not just us, our central bank that holds dollars, pounds, and euros. It's Chinese central bank as well. In fact, China has the largest stock of dollars in the world, right? And I did tell you that China is soon replacing by 2030, I think we saw, right? Replacing US as the biggest superpower, right? Superpower, you call economic power, biggest economy. Let's put it like that. Okay. Now, this being said, so coming back to the point, when you exported more during certain time period, when more foreigners invested in your country, more of property was bought in your country, so you received more money into the country, right? Because whatever currency they paid you in, whatever currency they paid you in, right? More money was coming into your banks, more money was coming to your financial institutions, and therefore eventually your central bank can convert that money in what? Can convert that money into dollars. Can it or can it not? Or any other currency that it wishes to. Or any other currency that it wishes to. Right? It can, right? Similarly, on the other hand, when you imported more money went out of Pakistan. Now, do you know why do countries go to IMF? We took a loan from IMF. So when countries have a deficit, that's known as balance of payment deficit financing. We'll talk more about it in tomorrow's class. So IMF, International Monetary Fund, and countries who belong to developing countries, nationals will be more familiar with this word and this term IMF, right? So IMF finances countries which are facing balance of payments deficits. So if more money is constantly flowing out of our country, which means that our foreign currency reserves will deplete. And why are foreign currency reserves important? We have to pay off our debt in dollars. We have to pay off our, loans, which a lot of countries, every country in the world, even US government has loans and so on and so forth, right? So when they have to pay back those loans, they need to hold foreign currency reserves. So if Pakistan balance of payments is constantly in deficit, which means money constantly keeps flowing out and our foreign currency reserves are depleting, then in future we won't be able to pay off our loans. We might default. As a country, we might default. Now this is a scary situation to be in, right? It's not like an individual where one individual defaults and doesn't pay back to a bank and the bank can take away your car or take away your house or whatever, right? But it's a country. What can you do if a country defaults? Wage a war against that country? Technically, that's not how it works. So IMF will intervene, give you loan, and again, that's not a very good situation to be in because more loan means you have to pay back more in the future. Are you getting me, right? So this is how these things operate, right? So this is part of international finance. International finance is a complete field of economics where you talk about these exchange rates, balance of payments, international transactions, money moving in and out of country, and all that stuff. Is this making sense? So this is can also set economic exactly, which are often not very country friendly. Yeah, that's correct. We'll talk more about that. Do remind me. Do remind me in tomorrow's class. Yeah, yeah. So the electricity charges that are increasing in Pakistan, the fuel prices that are increasing in Pakistan, not solely because IMF is saying that, but it's also that international oil prices are going up. But that has to do with the recent loan that we have taken and the restrictions that IMF has imposed. Because IMF also has to make sure at the end of the day that Pakistan or any other country pays back their loan, right? So they make sure that they are able to do that. Okay, so students, let's stop it for today. I think this was too much to absorb, right? Tomorrow I'll give you again a quick recap of this last part, like surplus, deficit, change in foreign currency reserves, so that it gets clear. And our future discussion, like next discussion, will be directly related to this, like what we were talking about over here, what equilibrium is, what disequilibrium is, how does that affect country's exchange rate, is it a good thing, is it a bad thing, how can country control that? So that's all the discussion we'll do tomorrow, right? So I'll see you tomorrow at the same time. Take care, have a good night, and take some rest. Okay, Allah Hafiz, bye.